Good morning, everyone. This is T3 Live Editor-in-Chief John Darcy here to bring you the morning call. It's Friday. It's been a big week in terms of we had obviously the big Fed announcement on Wednesday, the big igniting bar on Wednesday. Yesterday we were able to digest some of those gains, but I think it is exactly what the bulls want to see right now. And then we head into today. It's the Friday before Christmas. You have options expiration. You have a lot of index rebalancing going on. The fact that it is OpEx and rebalancing could mean there's more volume and a little bit more action than there would be on a normal pre-holiday Friday, but the action is not exactly going to be your most calculated technical type action. It's going to be due to some factors that are sort of hard to project about the effects of rebalancing and pinning and stuff like that with OpEx. So I think it could be a difficult day to trade, and I think you'll see a lot of traders sit on the sidelines today, taking a breather from what has been, like I said, an interesting week. And on Wednesday, a little bit of a surprise, obviously, with the taper decision, and we got that big breakout. You could sort of see just the anxiety melt away from everyone involved with the market when the Fed came out and finally tapered. I didn't expect the Fed to taper. I think most people didn't expect the Fed to taper. I think it was 66% of economists were not expecting that news. But what it was a small taper, and then they also changed their language a little bit. They're not necessarily going to start raising rates when unemployment hits 6.5%. And then people, I think, sort of realize that still 75 million worth of asset purchases every month, 75 billion, excuse me. That's a large amount, and we're still in a zero interest rate environment, in a very easy money type of environment. So QE tapering had been made out in the media to be this big monster that was going to derail the market and lead to a big stock market crash or something, when in reality it's not a big deal at all. And something interesting I read this morning was the fact that most people didn't expect the Fed to taper, but I think one reason why they did taper was because they've been running out of things to buy. Last month, the Fed bought more than 90% of the available mortgage-backed securities that were on the market. So they really didn't have much of a choice but to trim some of their asset purchases because, like I said, they were running out of things to buy. And I think that's sort of an overlooked reason why they did this. Most people weren't expecting it for policy reasons, but I think just basic mechanical issues, they just had to start trimming QE and toning that down a little bit. And now most economists, analysts think that they're going to do something similar every month or most meetings for the next 7 sessions, trimming QE by 10 billion per session, per meeting, and then wrapping it up by December. But like I said, they're tying that to unemployment, likely to inflation. They want to see inflation continue to fall. So just some policy things there, but very, very constructive to see the market rally off that QE tapering decision. I think sets the market up really well for the first quarter of 2014. But we'll take a look at the chart of the spiders. As you can see, that big reversal. I think when the decision first came out, people saw taper. You had algos that read the headlines. They initially sold. And the more people looked at it, they said, this is actually a very positive thing. And, you got to give Scott credit for nailing that in his commentary. I didn't think they were going to taper. And I think if they did taper, it would probably lead to a little bit of a sell-off in the market. But what we saw, like he talked about in his morning note, we got that initial sell-off, and then we rallied more impressively than I think anyone thought we would. But a nice move to close in new highs. And then yesterday, like I said, we opened lower, probed some downside a little bit. But all in all, we finished with very minor losses, and it was a very constructive day to get some digestion. And that's what we want to see over the next few sessions, is some digestion to allow the short-term moving averages to play catch-up, sort of form a platform here in the S&P above 1795, 1800. They could act as the springboard for the market in the first quarter of 2014. So obviously nothing to derail our bullish thesis right now, and I think that's the way to continue to look at the market and look for ideas. But as has been the theme all December, we've had some divergences and some opportunities to be a stock picker and really identify stock-specific action. And off the charts, not to beat our chests or anything like that, but off the charts has done a tremendous job of highlighting some of those most actionable setups. And then in real time, some shorter-term setups in the virtual trading floor. Not only have Mark and Scott done a great job of identifying some setups, but a lot of subscribers have done really well also, helping each other in the community come up with some ideas. And one thing to watch out for today is Facebook. There's some news overnight that Mark Zuckerberg is selling 41.4 million shares. So I wish I had 41.4 million shares of something to sell. I guess he's got to raise some cash for some Christmas shopping. I think maybe he's Jewish, so I don't know. I guess Hanukkah's over. But anyways, $2.3 billion worth of stock is what he's selling. So he's hired a few investment banks to help him unload all that. systematically. He's not just going to put in a sell order for $2.3 billion worth of stocks, so don't worry about that. But we'll take a look at the 5-minute, 24-hour to see where Facebook is this morning. Let's go 24-hour. Not really selling off too much. It's around 55, so not a big deal. I think they're just sort of taking it in stride. You've seen a lot of stocks actually take news of secondary offerings in stride this year, and it hasn't really been a negative like sometimes it's perceived. So yesterday, Facebook, a little bit of a pullback after a really impressive run. We highlighted this descending channel and then the bull flag and off the charts right here. And then the actionable opportunity we saw was right here on the bull flag after it broke out of the descending channel. We got a really nice move and hit our target within less than a week. So really impressive action there. You talk about Twitter. Twitter's one got back on track yesterday. It's one that I'm very bullish on into 2014. There's a couple things. When Facebook IPO'd, they had this massive float. The valuation was high. The valuation is high for Twitter as well, but the float is much, much smaller for Twitter. It's more akin to the way LinkedIn was after its IPO. You take a look at the chart. It was quiet post-IPO. All these analysts were coming out with negative ratings on it, and then suddenly they announced some new technology in terms of targeting ads and just an explosion. I think maybe some people were holding it down a little bit here to get an opportunity to get involved, but that's a whole nother story. Really impressive move. 3 days down, we got a red dog reversal. It led to some cash flow to the downside, but then yesterday surged more than 3% to reclaim 2 days of losses. And I think it's just a matter of time before Twitter's back above highs and testing. I think Twitter could get easily into the $80 area within a month or two in the first quarter of 2014. The company's in a hyper-growth phase, so it's hard to really talk about valuation and be negative about valuation. And then also the small float helps demand really push that stock higher because of the small supply. All staying within the social sphere, Groupon is a name that we've been listing on off the charts this week, and the timing was great on that. Actually, I think it maybe started last week. We'll take a look at the chart of Groupon, if it'll come up for me here. All right, Groupon. Anyways, Groupon not coming up. Anyways, had some really nice, impressive price action for Groupon after we listed on off the charts yesterday. Tacked on another 3.4%, something like that, I think. So this one's approaching our targets. Hard to buy right now, but just an example of some setups that we've been highlighting on off the charts that have worked out really well. The banks were a focus on our morning note leading up to the Fed decision as a sector that could react big time to Fed news like it often does. And our favorite setup that we highlighted was Goldman Sachs. Goldman Sachs chart is working, so that's good. Goldman Sachs was the most constructive setup. It's not necessarily been the strongest one at all over the course of this year at certain moments, but it was the one that was holding up best over the last 2 months or so. And then on that Fed news, really impressive breakout. It wasn't the biggest percentage gainer. That was Bank of America. I'll get to that in a second, but really clean breakout. And then yesterday just digested with very small losses and looks like it wants to go higher. Bank of America, like I said, was the biggest percentage winner on that post-Fed day. Huge reversal. It's been in this descending channel for the past few weeks. Traded down with the market right after the taper news and then reversed really impressively higher to break out of that descending channel, well above the 8 and 21-day moving average now. Yesterday it showed relative strength by finishing higher, so that tells me that it's just a matter of time, and it could be a short time before Bank of America is back here at highs, hitting that $16 level, which was Scott's projection for 2013, so that'll be neat and tidy. It could be neat and tidy, and then we'll see what it can do heading into the first quarter of 2014, but I think the banks are a sector that definitely look like they could continue higher. And then yesterday, basic material stocks. I think this is one that we don't really talk about a lot because what we like to teach and what we like to focus on is trends and trading in the direction of long-term, intermediate term, and short-term trends. In basic materials, the long-term trend is to the downside, but intermediate term and short-term trends are starting to look a little bit better. You take a look at U.S. Steel, for example, X. This is one that yesterday, really impressive breakout, gained I think over 5% to break out to new 52-week highs, but then you zoom out to the monthly chart, for example, on U.S. Steel, you see how much has been beaten down. Even the weekly chart, you can see it has some room to the left on its chart. I think you see this bull flag on the weekly. I think it could continue higher from there. Then another name to watch. This is a name that's a little bit more of a laggard even than U.S. Steel, but CLF. It's one that has a pretty significant short interest of 20+%. It's a name I've been involved in. had a really nice move. Each earnings report, like the last 3 earnings reports, have triggered short squeezes in the stock. You saw a move up to around the $29 level before a pullback over the last month and a half or so. But then yesterday, after finding its footing earlier in the week, CLF posted a gain of 3.5%, something around there. Back above now, it's 8 and 21-day moving averages, and one that perhaps out of this descending channel, like we've seen in a few stocks that have broken out of descending channels, could squeeze some shorts. So definitely want to keep an eye on there. And then I'll just take a quick run through high beta tech. Apple. Been weak after news that China Mobile deal is not finalized. I think there's still some minor terms. I think China Mobile wants a piece of App Store revenues from Apple. Apple doesn't want to give it to them. So I think that it's just a matter of time before that deal gets done, but there's still some things to work through. So Apple's been weak due to that, because that's huge news. The China Mobile network, the customer base is 7 times bigger than that of Verizon. So that just tells you how much of an impact that could have on Apple if they can start selling their iPhones to that network. But I think Apple could find its footing. I think it's great value still here. Look at Amazon. Amazon, really nice bounce back. It put in a little bit of a topping type action here on the day after Jeff Bezos started talking about drone delivery. Looked like it might want to break lower out of this little channel that formed, but then it repaired, and then on Fed Day, nice reversal like you saw in a lot of stocks. Looks like it could test highs again. The real rock star in the group is Google. Google doesn't seem to want to pull back at all. Everyone, once a stock is strong, they're looking for pullbacks to buy, but Google's not letting you weigh in really easily. So I think you could look for potential cash flow on a breakout, and it's one that I think will continue higher. It's a little bit hard psychologically after such a big move, $1,000+ stock, almost 1,100 now. A little bit hard psychologically, but one that I think could continue higher with everything they have in the pipeline. Just a couple other quick notes. Solar City is one that we highlighted in Off the Charts on Wednesday. Really impressive action there. Instant gratification is not always what you get, but it is always nice if a trade happens immediately, because it's directly on your radar and you can have a higher likelihood of being involved. But really impressive move out of this little triangle pattern here. Gained almost 8% yesterday. Our target's up here near previous highs, so this igniting bar tells me it could go higher, and something to keep an eye on. And then gold. Gold just continues to get pummeled. Nothing compelling here, just something worth pointing out and looking where it could go. Breaking below this monthly pivot. Doesn't have much in the way of support till down here around the $100 area. That's GLD. So all in all, gold not compelling right now, but looks like it's headed lower. Don't try to be a hero and catch a falling knife. Anyways, we're getting near the open now. Like I said, quiet Friday is what you'd normally think, but we do have rebalancing, OpEx, so it could liven up the action a little bit, but not necessarily make for easy trading action. So I would definitely be a little bit more cautious today. Look to be very stock specific if you're going to trade, and get ready for the holidays. It's a great time of year. So happy holidays from everyone at T3 Live to you and your family, and we look forward to bringing you some more action on Monday as hopefully the market gets some rest and can continue. Santa comes to town, maybe bring some presents for traders. Everyone have a good day.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.